Hello friends. Welcome to GrowFin's online learning module. In this session we will understand GST. We will also look at demonetization. This topic is part of CS Foundation course, Paper 3 Business Economics in Chapter Indian Economy Overview. For detailed learning, you can enroll on our website www.growfin.co.in. Let us understand what is GST. GST is an abbreviation for Goods and Service Tax. GST is also known as Value-Added Tax, that is VAT in few countries. GST or VAT is a consumption-based tax wherein the basic principle is to tax the value addition at each business stage. To achieve this, tax paid on purchases is allowed as a set-off or credit against liability on output or income. GST is levied on all transactions of goods and services. Thus, in principle, GST should not differentiate between goods and services. Internationally, GST was first introduced in France and now more than 150 countries have introduced GST. Most of the countries, depending on their own socio-economic formation, have introduced national-level GST or dual GST. GST is different from the previous tax structure in many ways. Previously, taxes treated goods and services differently. However, goods attract excise at manufacturing level and VAT at the time of sale. In contrast, services attract only one levy, that is services tax on provision of taxable services. GST is levied on all the transactions of goods and services made for a consideration. This new levy replaced almost all of the indirect taxes. In particular, it replaced the following indirect taxes. At central level: central excise duty including additional duties of excise. Service tax. Additional customs duty, commonly known as countervailing duty or CVD, which was levied on imports in lieu of excise duty. Special additional duty of customs or SAD, which was levied on imports in lieu of VAT. Surcharges, and cesses. At state level: VAT or sales tax. Entertainment tax unless it is levied by the local bodies. Luxury tax. Taxes on lottery, betting, and gambling. Entry tax not in lieu of octroi. State cesses and surcharges insofar as they relate to supply of goods and services. Now let us understand what is demonetization. Demonetization is the act of stripping a currency unit of its status as legal tender. The old unit of currency must be retired and replaced with a new currency unit. On November 8, 2016, Prime Minister Narendra Modi announced the demonetization of Rs 500 and Rs 1000 notes with effect from the next day. Through the days after November 8, the government has made a set of claims with regard to the objectives and outcomes of the demonetization scheme. The first claim was that demonetization would plug terror financing. The second claim was that demonetization would help unearth black money. The third claim was that the unearthed black money would expand the fiscal space of the government. When unaccounted cash is not returned to the banking system, the Reserve Bank of India or RBI can use the savings to pay the government a dividend. The fourth claim was that demonetization would help reduce interest rates in the banking system. The fifth claim was that demonetization would help formalize India's informal economy, reduce the extent of transactions in cash and help create a less cash economy. A number of incentives have been offered to induce people to use digital transactions. Demonetization as a cleaning exercise may produce several good things in the economy. The immeasurable benefits of having more transparency and reduced volume of black money activities can be expected as long-term benefits. This brings us to the end of the session. Thank you for your time. We are sure that this session has made your concepts of GST and demonetization clearer. For detailed learning, you can enroll on our website www.growfin.co.in. Please like and share our videos. Do not forget to subscribe to our YouTube channel for receiving updates on our new videos. Happy learning!